Kids, maybe more. Thanks once again for joining us. Vinay Paharia is with us, Chief Investment Officer at PGIM India Mutual Fund. Vinay, good to have you with us here. Thank you very much for your time. You know, yesterday we got that big number. So domestic mutual funds pouring in money. And that has been true actually not just yesterday. Yesterday, of course, was the largest we've seen a single day in a while. What are you doing, Vinay? And are you fully invested? There were a lot of mutual fund managers and PMS managers who were kind of sitting on some cash, waiting for dips, etc. I think all of that is now out of the window. What are you doing?
Hi, Prashant. Good afternoon. Thanks for having me on your show. So, Prashant, we do not take any cash calls. So, our objectives are largely to remain invested as much as possible. So we do not take any such cash calls. And yeah, that's how we manage our funds. Having said that, I think overall there has been a lot of valuation gaps which has got opened up across the capitalization curve. And I think I'm sure a lot of investors would have wanted to take advantage of that.
Gaps, Vinay? Can you be specific?
Sure. So I think the large cap segment per se is fairly attractive today. We have not seen a material gap between the underlying fair value growth for large caps as a basket compared to their share prices. Whereas on the small and mid cap side, we have seen significant re-rating, especially from the start of this fiscal year, such that now most of the small and mid caps are trading at significantly higher than their current fair values. And hence, the potential upside has reduced for most of the stocks in that category. And hence, I think that's what I was alluding to.
Vinay, you said that you don't take a cash call. Money is flowing into funds, thick and fast. So the fresh money allocation, where are you putting it in now?
Hi, Rima. We would be incrementally putting in most of the money to work, specifically in large caps and selectively in small and mid caps. Apart from the breakups by capitalization, if we were to look at the markets from a growth and quality perspective, we had actually recently released a note which talks about the wide gap. And the gap is between good quality and high growth companies and weaker quality and weaker growth companies. What we have seen is that in this year, good quality and high growth companies have significantly underperformed the weaker ones. And I think that's where a large portion of opportunities lie, not only in large caps, but also in a lot of small and mid caps. So I think we are very closely looking at the high quality, high growth space in across the board market capitalization range.
Hi, Vinay. Good afternoon. Nigel on this side, and good to see you in. Vinay, I recall your portfolio had a fair bit of IT stocks, both large and mid cap. And irrespective of what the commentary has been or the results have been, the stocks have done very, very well. How are your positions now on IT? I mean, what is the total weightage you'll have to IT? And post this kind of a run, with some kind of uncertainties going ahead, will you not be adding, or would you look to lighten some positions?
Hi, Nigel. So we have been adding to our exposures to the IT company for the simple reason that the entire space got significantly derated over the last 1 year's time. And as you rightly said, the growth has reduced, but the valuations have reduced at a faster pace. And if we look at on a holistic basis, there are many IT companies which are operating in specialized field like engineering and R&D space, and some of them are in auto research, so on and so forth. They'll present lots of opportunities. So I think on a bottom-up basis, even the IT sector presents material opportunity. We are underweight the sector, but we have reduced our underweight significantly in this sector.
You've reduced your underweight significantly in the IT sector.
Yeah, we have reduced our underweight position, but yes, even now we are underweight the IT sector.
Got it. What are the other tactical calls or the changes that you've made in your portfolio?
So Rima, we are significantly overweight private sector banks, especially the larger private sector banks. We think that's a no-brainer trade at this point of time. Extremely attractive valuations with reasonably high growth and high ROE. And then another space where we are positive is in the healthcare space, specifically on the hospital side. So we own a basket of hospitals across the board, which appear to be growing at a fast pace, and they are also available at reasonable valuations based on our internal assessments.
Okay. Would you want to name names, Vinay? Would you be able to in the hospital space?
So Prashant, we cannot talk about individual names, but I think we are positive across the board. If you look at the entire hospital space, most of the companies in that space are reasonably attractive. Even the large names or the mid-cap names. All of these companies possess a reasonably good growth outlook. They have reasonably high returns on equity, and even now they are available at reasonable valuations according to our assessment. So I think that's how we are positioned.
Yeah, one of the changes which is underway, and it'll be, I think we'll be talking about this for many years, is renewables, right? In many forms. There's autos, there's electric vehicles. On the generation side, there will be changes. Do you own anything which kind of gives you exposure to that? I mean, many believe going individually business-wise is hard. So maybe you look at banks or financial institutions which are funding these projects in a big way. Any thoughts?
Yeah, so Prashant, I think when you look at any trend, as shareholders, we generally benefit if and only if that trend gets captured in positive economic profits. So for example, the financiers might not extract the best returns on equity out of it, but let's say a company which is working on ER&D space might be a better benefit out of such trends, or companies which are supplying the ancillary products, or companies which are supplying chemicals to electric vehicles, so on and so forth. So I think what we try to do is look at various themes and companies which can earn higher share of economic profits from those themes, and which can earn a growing pool of economic profits from that theme. So yeah, I think most of the companies could come in from different sectors. Like for example, in materials, there could be in a lot of chemical companies which benefit out of the changes in the EV side, for example, benefiting from adoption of EVs. So I think we look at the entire thing very holistically.
Vinay, we'll leave the conversation here for now. Thank you very much for joining in. We'll slip into a break on that note. On the other side, we'll get you a check on what dealing rooms are saying in our